So in this video, I'll be sharing with you how to trade divergence, the effective way you should trade divergence, and the time frame you should always trade divergence, how to identify divergence, how to trade divergence, the time frame to trade the divergence, and the market scenario in which you are meant to trade divergence. The question is, why divergence? Divergence is part of the additional entry confirmation tool that I use in trading, and over time I've seen how effective this divergence is. That whenever I see the divergence, it plays out 70 to 80%. So as such, any trade that use divergence to confirm is a high probability trade. So without saying much, let's go into what divergence is all about. What is divergence? Divergence simply means a difference between the price action on your main chart and your indicator window. What that means, for instance, this is our chart. Price is buying. So price is giving us a higher high, and a higher low. So as this persists, suddenly, so let's assume this is our indicator window. So price is giving us a higher high and a higher low. Indicator window too is giving us a higher high and a higher low. And then suddenly the indicator window now begins to give us a lower high. Begins to give us a lower high, and a lower low. So in this scenario, there is a difference between what is on the main chart and what is on our indicator window. So this difference is what we refer to as divergence, and the opposite is for a downtrend, where price is giving us a lower low in a downtrend and a lower high, and our indicator window is as well giving us the same signal, and then suddenly it begins to give us a higher high, whereas price is still selling. So what this tells us is that anytime you see divergence, it shows that a reversal is about to happen. So that is all you need to know about what divergence is all about. So let me show you briefly how to identify divergence. Take this zone for instance, this shaded portion, and look at what happened. I'm going to connect the high of those candles. You can see that. And look at our indicator window. This is what we are having on our indicator window. So obviously price is making a higher high, right? A higher high. But look at what indicator is doing. A low, a lower high, and a lower high. So you can see that the indicator window is contradicting what is happening on the main chart. This is for an uptrend scenario. There is a previous detailed video on this channel already where I have talked about divergence and how to identify it. So I will recommend you go back to that previous video, which you will now know in detail how to identify divergence. Okay, look at this scenario. This is an uptrend, and this is the divergence. Okay, this is a sell scenario now, right? You can see this. And look at this. So you can see that here price is giving us a lower low, but our indicator window is already giving us a higher low. So this disagreement is a divergence, and that shows that a reversal is about to happen. So now we've talked about what is divergence, and secondly we have discussed about how to identify divergence. So having done all of this, the second thing now we need to do is, how do we trade divergence, and what time frame do we trade divergence? Now, what time frame do we trade divergence? Divergence plays out on all time frame. It plays out on every time frame. And before you can see a divergence, it is either price has bought for a long time or sold for a long time. Then divergence is a reversal signal. Now, divergence will not play out immediately you see the signal. Please take note of that. Seeing a divergence alone is not enough for you to execute a trade. Look at this. This is a divergence, right? Here is a typical divergence. But look at what happened. Despite this divergence, price still push to the upside. So the question you are asking yourself is, what exactly happened? And I'll be sharing that with you in the course of this teaching. So please avoid executing a trade immediately you see a divergence. So it works on all time frame. But however, our goal is to use divergence as an entry confirmation. And we are not making trading execution on every time frame. So which means that we'll be using our divergence on a particular time frame. So what is this time frame? With our strategy, we make our entry either on a 1 hour time frame, 30-minute time frame, 15-minute time frame, or down to 5-minute time frame, depending on what suits you. But I personally, I will love to make my entry on a 1 hour. When I'm making on the entry on a 1 hour, I am using a candlestick pattern, which is a bullish engulfing, bearish engulfing, or a bullish hammer, bearish hammer, or a pin bar. And if I am making an entry on a lower time frame, I look forward 15 minutes, I look forward for a break of structure, a break of trend line, or a chart pattern. And each of these, there is an additional confirmation of my divergence, which will always come out to play. So now, for the time frame we are looking at is 1 hour and 15-minute time frame. If you are using 30 minutes, it's still fine and okay. You look for the divergence on that particular time frame. Now, having established that, what market scenario do we use divergence? Always use divergence for a continuation trade. Always. And whenever possible, use divergence for a continuation trade. Please do not use divergence for a reversal. Look at this carefully. Price has been bullish. Any attempt here is an attempt to sell, which means you are anticipating a reversal. Please do not anticipate reversal. Every zone of reversal are zones of manipulation. You can see what happens here. A liquidity has been built up here. And what next? You see the price move to take away this liquidity that is built on this upside. So by all means, avoid taking reversal. Always look for a continuation trade. It makes trading easier simple and sweet to take. Now this is a scenario. Remember, we say whenever price is moving, what next do? We look out for our point of interest. What is our point of interest? This is an uptrend. Our point of interest are area of support, other blocks, smart money cube. So here I'm marking my smart money cube. All right. And which other one? We have this. Look at this. That is a smart money cube. Now pay attention to this. We have this smart money cube, we have this smart money cube. Now, instead of you anticipating for price to reverse and passing through the rigor of all of this, look at price just tap into this smart money cube and return at ease. Now let's look at this on a 1 hour time frame. That's great. So here is the smart money cube that we just saw on the 4 hour time frame. And what happened? Remember, I said I use a pin bar or an engulfing candle to find my entry using a candlestick pattern. Now I want to show you this. You can see this particular pin bar. First rejection, second rejection. You can see it. You see how obvious it is and see how this thing works. You can see that first pin bar, second pin bar, and then you see that rejection. Now look at this. Can you see that divergence? So this is the divergence. And see how perfect this trade plays out. Immediately, this divergence tap into this zone because 1, it is in the direction of the trend. 2, it is in a point of interest, which has been proven that whenever price comes to this zone, price usually respects this zone. So it is from a proven point of view. It is not just a trading, but you taking the reversal from here is based on what? That is the question. You went and anticipate reversal based on what? But coming to this 1 hour time frame, you see how beautiful this plays out. So 80% of this divergence in your point of interest in the direction of the trend as a pullback continuation trade plays out perfectly well. So please avoid anticipating for a reversal and let us endeavor to trade in the direction of the trend. Another thing I want to show you here, look at this. This particular move here, price begins this move from this zone. Price begins this particular move from this zone. Okay? And look at what happened. This is a break of structure. A break of structure happens at that point. So here now is our break of market structure. And after this break of structure, what do we want to see? We want to see price pull back into our zone for us to buy. And what is the zone? Look at this. We have a fair value gap in this zone. This is a fair value gap. This is an imbalance. So we are having an imbalance, which is a fair value gap in this price scenario. And then look at what happened. Price now pull back into it on a 4 hour to give us a divergence. However, Let's look for this on a 1 hour time frame. Now this is a 1 hour time frame. Okay, in the scenario of this, alright, there is no divergence on this 1 hour time frame. We only have divergence on the 4 hour. Let's check it out on a 15-minute time frame. Great. So remember I told you on this time frame you will always find your divergence. Can you see this? And then price changes direction. So you can see how excellently this pattern works. And remember I told you that on my 15-minute time frame, here is my trend line being connected, and as you can see, price break out of this trend line, retest it, and it's a move to the upside. So this strategy works. These divergences are effective and are in every market scenario. So all you need to do, please train your eye to identify this, and not just identify, but trade this divergence in the direction of the trend. Avoid being a victim of price manipulation. And I believe you have learned something new from this particular video. This is just to refresh our mind on divergence and to let us know that this strategy is still very much effective. And I believe you have learned something new. Please do well to give this video a like, share. If you have not subscribed, subscribe to the channel. Turn on your notification bell so you'll be the first to get notified when we upload our next video. And to all our new subscribers, thank you for your support. Thank you for sharing the videos. Thank you for watching the videos. And see you in a subsequent video.